What's up? Welcome to the Best of US Investors, and this is our Platinum Channel Week in Review, where we discuss all the fun things that happened over the week and how markets performed, along with segments from the Platinum Swing Trading Call and from Carrie's Zoom call. But we're going to do a little different this week because honestly, I am worn out and have been at it since, well, last Saturday. And so this segment, we're just going to really hit upon what everybody, well, got a cage rattling about, and that is the markets. In this next segment, I'm going to take you through the demise, not the demise, I guess that's a strong word, but the fall of SMCI and Nvidia, and what that means from a technical analysis standpoint. So Friday the 19th was just, well, for SMCI, Supermicro computers was pretty disastrous. And what I'm going to do here is I'm going to break down this chart from its move higher back in January of 2024, this year, to its peak right around March 8th of 2024 to where it ended up yesterday, April 19th. So it wouldn't be yesterday when you see this, but it was Friday, April 19th. This is a company who is providing these super incredible computers that data centers are using to produce data and to do all the things, and Nvidia chips in it and GPUs and blah 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 and all this. They have exploded back on Friday the 19th of January of this year, 2024, and made a pretty big move. And then from there, I mean, it was all about Supermicro computers. It was all about them, and they became like the biggest thing within the the small cap index. IWM is the ETF. It was like the massive market cap growth was so gigantic, it became like I believe over 40% of the overall market cap in comparison to the other positions in IWM, the ETF. So it made a move higher. I mean, and everybody on CNBC, the narratives on X and the tweets about this just blew this stock up from a price on the 19th, opening price of $347 to its peak of $1,212 or $29 on the March 8th. From there, it started to lose ground, pulled back to its 9, bounced off, and then started pulling back through its 9 back on the March 15th, made a move down to the 20, bounced off that, hit the 9, went lower below the 20 on the 19th of March. And right here, this is that signal that should be clicking in your head on your checklist, breaking through the simple moving averages. It made a bounce back up on the March 21st, went through the 9, closed above the 9, closed above the 20, but failed the next day and closed below the 20 again, bounced off and blah, blah, blah. And as you can see, it just continuously trended after March or April 3rd of this year. It just hit the 20 and kept on bouncing below the 9, eventually breaking through the 50, which should be like, signal of, hey, this thing's headed south, and eventually came to March 19th, and it tanked like a 23% tank, like big time. And one of the bigger reasons was that they announced they're going to report earnings, and they're going to report earnings on the let's see here, come on the 30th of April, and probably after market, period ending after market. And they announced, but they didn't give guidance, and it just lit the whole place on fire. Now remember, Thursday night of the 18th of April, Netflix came out, gigantic earnings, blew the doors off, and they really said we're no longer going to give subscription guidance anymore. Subscriber guidance opened up and it tanked as well, triggering, I believe, a algorithmic triggers and SMCI coming out doing something similar in that they're not going to give any guidance prior to earnings call on the 30th, and this thing lit the place up. Unfortunately, if most, I mean, today in this time and age, markets are traded on technicals. It's algorithmic trading. It's programmed in there. If this, then statements. If this happens, then this happens. Here's how sophisticated this is getting. They're going out with these bots and they're combing through Twitter, all the news feeds, Reddit, all these, and they're looking for headlines. And they're doing it so fast and they're able to go through so much data because they're supercomputers and they're program algorithms, and they are finding these little things and they're trading off it. If you see a headline, like in this case with SMCI, and they say, hey, we're going to report earnings, period, end of the press release, and there's no guidance, there's no like pre-guidance, they look at that, the algorithms look at that as a negative, give it a -1 versus a +1 or a 0, and it lights the place up on fire. And that's what happened to Supermicro. Now, I use the 90-day and the 200-day as my intermediate and long-term trend lines. You can see here on this chart, we came down, or SMCI came down towards the 90, just above it, okay? There is also a level of support that was, a small level of support that was created back on February 8th. The question is, on Monday, will this be a bounce off point or will this be a continuation south towards the 200? Now, you look at the Bollinger Bands, it's broken through the below the lower band of the Bollinger Bands, typically 5% of the time. Well, only 5% of the time do they continue that. They typically bounce back above 95% of the time above the band. So honestly, you could see this thing bounce back towards the 9 over the next probably, next week, throughout next week. You get to earnings on the 30th, and depending on what their earnings look like, this could be a continuation south towards the 200, or it could be a break through the 9, the 50, the 20, and you can see this thing go higher. Time only will tell. But if this from March 8th to Friday is telling me anything, this is a southern heading or a southward trend. It's moving south. There is a move out of high risk or high beta positions, and Nvidia has been the darling so far this year up until really until the first week or so in March. But most people are like, oh, it'll come back, it'll come back. Watch the technicals. Look at slow to stochastics here. It's negative below 50. That's a no bueno to me. The MACD here, look at that. Beauty. I mean, this thing is headed south. The histogram is going south in a bigger way as well, based off yesterday. And then the relative strength here is at 32.52. Anything above 50 is bullish. Below that, and it's bearish in my mind. That is a -1 score when I'm adding up my scores on all the different indicators I use. What this is telling me, there's no reason why I'd be in this right now. I wouldn't be buying the dip. I'd be waiting. I'd be waiting for confirmation of a pivot, a trend move higher, a break through the 9, a break through the 50, a break through the 20 before I got long in this. If you look up here on my chart, this is where there are a lot of sellers have been. This is where the price would get into this area between what is that? Right here between 10.27 and 11.08, and it would find resistance and it would sell off. Where is the buy? Where is the support? Well, that's right here at not 291. So I'm looking at this and I'm going, well, maybe this is run its course, and we are headed back down to where its trend is. So I'm going to jump out to a weekly chart here. And if you look here, this is May of 23. It moved from close on May 23 of 137.23 and basically got as high as on August August 7th of 23, closed at 254 and basically went sideways until January 8th, where it then started breaking out. So what this is telling me is this big exponential move is typically you see a 50, anywhere from 50% retracement to 60% retracement. I'm looking here and I'm seeing there's a lot of buyers down in this area, or were a lot of buyers down in this area. And so I look at this and I go, my target on this, and this is not advice or recommendation, it's your decision what you do. You take responsibility, you break it, you buy it, you own it. Don't blame me or Best of US Investors or anybody else associated with Best of US Investors. Do your due diligence. There's my disclaimer. But I'm looking at this going, if this thing doesn't hold above, in this case here, this is the 20-week moving average. Chances are it's going to the 50-week moving average. And then from there, it would go to the 90-week moving average. You can see this is a big drop. And if they blow earnings, if they come hint at any negative guidance going forward, my belief is we're headed between the 90-week moving average and the 50-week moving average. And because of what they do and what they supply, it could be a buying opportunity in this area. But I'm going to wait. I'm being patient. This is a weekly. This is 1, 2, 3, 4, 5, 6 weeks of downward trend. No bueno. No, I do not want, rotten chicken for dinner. This ain't going to happen for me. All right. So let's go now to Nvidia. All right, so this is Nvidia on a daily chart. And as you can see, similar as SMCI, back on March 8th, you saw a breakdown, came down to the 9, basically trailed the 9 for a while, broke above it right after the 20th of March, got into this area where there was a lot of resistance and a lot of sellers. And so since March 26th, it is basically trended south, similar to SMCI. I mean, you think about it, these kind of companies are all in the same bed together. And so on, it broke below the, it basically since the 27th of March, it broke and closed below the 9, and then basically trailed the 9 pretty much all the way until Friday, where on Friday it dropped 10% off and basically stopped. There is a level of support over there a little bit, but you have this gap right in this area, and chances are gaps typically get filled. And so that gap would basically bring you down around my 90 period moving average, which is an intermediate trend line for me. If it breaks through that, to me, it's the 200 from there. There is a lot of buyers down around between 498 and 520. Now, I will get comments on this video and people saying, oh, no, it's not going to go that low. Why not? Look at the economic conditions that are happening in our country. Look at the lack of liquidity in the global system. Look at the cost of borrowing money. Look at all these factors. And remember, Nvidia, SMCI, any company you think of is fueled by consumption. If it's me and you as retail consumers, or if it is a corporation who provides a service or a product, at the end of the day, it is about consumption. And if there is no consumption or a lack of consumption, then you're not going to see these companies that have been high flyers since the first of the year. They're going to come down in value. If Nvidia were to come out with a bad guidance on their earnings, I believe you're down around the 200, at be below the 90 and between the 90 and the 200 and the 90. And if it's really bad, you're down around the 500 mark. And so I'm looking at this trend. If I go out to a weekly chart, this is 1, 2, 3, 4 weeks of negative. Yes, last week was really bad for Nvidia, basically down 13% for the week. The next stop is the 20, and that's at 703. But I mean, I honestly believe it'll hit the 50 here week moving average around 537. So that's my take on these two companies. This is not a time to get, oh, buy the dip. This is looking for confirmation. Look for a pivot off of a support level, and that's where you start to entertain and you dollar cost average into a position. But what I am seeing here, 4 weeks of negative on Nvidia and 6 weeks negative on SMCI, to me that doesn't instill confidence. That's like putting your daughter in a car with a bunch of drunk guys. That ain't gonna work in my book. Coming out with the guns and I'm protecting my fam. When I think of this, this is what you've got to do. This move in Nvidia, SMCI, even a lot of the big names is a de-risking. It's a risk off into assets that are risk adverse. They're go to safety kind of play. So that's my take on Nvidia and SMCI. Leave comments below. Shoot me an email at support@bestofUSinvestors if you have questions. All right, next up, Mark breaks down Netflix, its earnings, and then its drop on Friday the 19th.
Big earnings today. We've got the Mag 7432 or whatever they are. And of course, Netflix came out with their earnings and they crushed it for the first quarter. But then when they looked at the outlook and the guidance, the market didn't like that. So this morning it was down 6.3% pre-market trading. And again, the last 2 times I think it went up after earnings. And I put out something yesterday on my office that said, this is really close to the upper resistance level. And it hasn't had that before. And we're kind of in a different market too. And markets trade for the future and not for what we know today. And I think that's kind of what happened with Netflix. And Bob, I know you trade it, but it went down on the guidance, and that's what it went down on. And
no, the lack
had great
of
earnings. Well, yeah, that absolutely.
That's why it's going down, right? It's going down because they're not going to report subs anymore.
Right.
That's why it's taking a hit, not because of performance or numbers. And everybody's taking that as it's going to that they're hiding something.
Yeah.
So
and their guidance. Go ahead.
That gap is going to get filled on the way back up.
Yep. But again, my trading guidelines I would have gotten out before earnings, and I said that yesterday, right or wrong, and it wouldn't have helped me the last 2 earnings reports, but it would have helped me on this one. But again, you see this gap. This will come down, and you'll see a price action come back within the Bollinger sometime, and we're going to see probably a hook back up, like Bob said. We'll see how that goes. And this is why it's just having trouble finding swing trading positions and setups right now, because here's our SPY, and it's gone down. It's below the 50, it's below the 9, the 20 is all diving now. We're coming down. Here's the 200 down here. We're just following that Bollinger Band, the lower Bollinger Band, straight down. If you look at the year, again, you can see we've come out of our wedge. This was the wedge that we put in place, and we broke out of that wedge, and just what a rising wedge does. We come down, we look at our MACD is horrible, or slow stochastic's horrible. I mean, this isn't looking good for, you know, a positive setup of a swing trade on the S&P for sure. We go into the Qs. Okay, this used to be really sideways trading for a long time, and you can see the Qs are doing the exact same thing. Come down here, we've got, you know, the MACD's done, the stochastic's done, the RSI's at 30. It's just heading down. If we get down and can't, if we get to the 200 and can't get a bounce off of the 200, and it goes through and then becomes resistance, then you're going to see a lot of it. We're not going to see too many swing trades in that scenario. I'm going to pull it out a year. And again, here's the Qs broke out of the rising wedge, and here was where I anticipate we're going to be going. And you can see that was about 410 or 4100, and you know, where are we today? 41.7. Okay, so we'll see where it goes, if we can get a bounce back up, or if we come down and, you know, we hit the 200. When we go in and we look at the Dow, the Dow's done some green this week because of United Health, DIA. So see, the Dow is kind of flattened out a little bit, okay, and it's still under the 9, but it's flattened out. You can see a little bit of a curvature over the MACD. We'll just have to watch and see what happens. If, you know, the 9 is now along with here's where some cells are right here. You're going to run into it right at the 9, and that's where they put it. So that's going to be a level of resistance. We'll see what happens with the Dow. And again, this is only 30 stocks. If we go and we look at just the segments, let's go to technology. So here's technology. Okay, you see it just kind of died, and it was going sideways right along the intermediate resistance level for a long time, and then it's just boom, and we're getting closer to the 200. I'm not seeing too much improvement on the MACD, the stochastic. You know, we're at 30 at the RSI. That's technology. Let's go look at real estate. Real estate, you know, this really took a dump because of interest rates being going to be higher for longer. This actually is now down below the 200. So real estate is now in bearish mood, and as a sector, bearish market as far as I'm concerned. We've come down. We haven't got to the intermediate support level yet. We're seeing a little bit of a flattening out. You usually, you know, only spend 5% of your time outside of a Bollinger Band, so it's pulled in a little bit. We'll see what happens with real estate. So not much to find in a swing trade in real estate. Let's look at XLY. So here's discretionary, consumer discretionary. Okay, things that people go buy that they don't really need. And you see we've dropped below the 200 on this one. So this is today we dropped below. We'll see if we stay under it. Looking like we are to a degree. I mean, there's another one. There's 2 segments now and below the 200. Okay, bearish. Okay, won't be finding too many swing trades in discretionary at this point. Let's look at here is materials. Okay, materials came down and it caught some wind right here on the 50 support level. So it's been 4 days trying to get below the 50, but it can't do it. So that's a nice level of support at this point. And we do have some cells up here right above it, but it's not below the 200 yet. So materials still below the 9, still below the 20, but it's finding support here at the 50, even though we've seen the Bollinger Band coming down. Still, our oscillators are not looking good on materials. Communications. XLC, again, sliding down. We actually have passed through what used to be support at the 50, and now it'll become resistance. We've dropped down below that. So communication sector, again, down. Let's look at industrials. Same thing on industrials, down below the 50 yesterday. Tried to come up, couldn't quite make it. Still there. Excuse me. Take a excuse me. Must be allergic to downtrending charts. We've got a lot of them. Let's look at energy. You would think energy, you know, would be good with war and all that in the Middle East. Energy did pop up a tad bit today. We're still under the 9, but we're right here. This is the intermediate resistance level. We'll see what happens. Oscillators still don't look good yet, but we'll see. Energy is a play that, you know, is very newsbound. Something happens this weekend and there's a bigger conflict or a boat gets sunk going through the Red Sea, you know, you'll see energy spike, and it's really hard. Charts can't really tell that for you, but you got to know it outside of your charts and what's going to happen. Let's look at financials. We talked about the banks. Financials came back up a little bit, but again, here we are. Here's the sells. Sells and the 9 are at the same level, and that's exactly where you see we're at today. Here's the intermediate resistance level. It's going to be tough. We'll see if we can get past that, but again, still a negative looking chart for financials. Healthcare. Healthcare again. Right here, we have sales, boom, 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 boom. Can't get past. We're going sideways. Be watching this one to see, you know, with the United Health kind of helping this out. We'll see if this the 9 can get down and we can pop some price action above that. See if we get that turn on healthcare, but right now we're not seeing that. So when I looked a little earlier, the only 2 segments that were looking pretty good or better above the 9. Oops, what is that? Staples. So you can see today we've got price action has come back up. We've had it come down. This will be something we'll watch. This will be something I'll go into. I'll look at the consumer staples and see what's composed in there and see what's causing this to go up. And that's where we'll start seeing charts like this on individual stocks, and that will give us a potential for a swing trade setup. You can see the MACDs coming back. We see the stochastics coming back, and we got RSI coming back. So when I go look at things this weekend, I'll be looking at consumer staples right now because this is where I'm seeing some improvement, at least in a segment. And then the last one I saw some was utilities. Okay, so look at what utilities did today. The only problem is we're hitting the intermediate resistance level in our sales. So I expect it to kind of do this kind of thing with utilities. And I don't know if we'll see anything or not in utilities. I'll go take a look, but I imagine there's some charts in there that look like this. So those are the 11 sectors of the S&P. And I'm just going to throw in the semiconductors because we've had issues with semiconductors and it's just kind of fallen off just like technology. Okay. This looks exactly like the technology stocks. And then you see we're underneath the Bollinger and we're just sliding down and everything looks pretty grim for semiconductors. And so why does this happen? We already looked at the Netflix chart, and let's just look at some of the big ones that run these indices. Here's Nvidia. You see, we were going sideways for a long time, and we popped under the 9 a little bit above it, and we had a nice tight Bollinger, which means we're going to go sideways. Now we're seeing the Bollinger widen out, seeing price action come down. We've had the MACD since this point. You can see it, falling down. The MACD said, here we are, we're, get out. We're saying the same thing, roll over in stochastic, and we're at 38 on the RSI on Nvidia. So, right now, swing trading wise, it doesn't look very good on Nvidia. We go look at Meta. This was one that was holding up communication sector, and you can see today we've kind of hit support at the 50 for the last couple of days, and today we broke down and we're sitting right at the Bollinger Band. Again, we're seeing kind of a trend down. Look at the MACD, look at the stochastic, look at the RSI. This is starting to break through a little bit. Here's your intermediate resistance level, and that's where we can't really get past. It's my line in the sand. It's just hard to get past that, and we'll see what happens. But again, these are the reasons we're starting to see the indices go down, the markets go down, because we're seeing a breakdown in these large techs. Apple, of course, here's Apple. Okay, we're even down below the intermediate support level now. That's pretty bad. Our MACD crossed back over, slow stochastic, and we're at 37 on the RSI. Just not looking very good. We're under the 200, by a long ways on Apple. This has been bearish for a while. And again, a lot of funds, a lot of ETFs, they own a lot of Apple. Look at Microsoft. Microsoft, same thing. Finally come down below the intermediate resistance level. Here's your 200, okay. Come down the MACD a couple days ago, slid down, stochastic, RSI 33. And Tesla, I mean, you can see now why we're seeing the markets go down. The big ones are finally cracking. There's really nothing there that I can find. I mean, you're seeing a few of the sectors come back and look kind of better, but we'll see what happens. You know, we'll have to see over the weekend for the sectors. Now, there are some things out there that you can always find something, but you got to remember that we're moving in a negative trend now. And let's just look at Starbucks. So yesterday, Starbucks had a one candle close above the 9. You can see we've had this massive dumpster fire in Starbucks, and then all of a sudden we hit this intermediate support level, went down below it, and then came back up. So you're seeing a little bit of improvement. You look at the MACDs coming up, the stochastics coming up, RSI still below. Here's where your sells are. Here's your intermediate resistance level. Here is your risk down to support, and here's your reward up to your sell levels and above. So, you know, if you were so inclined with these kind of market conditions, I mean, here's something that's a potential setup. We're under the 200, so you got to watch it, okay? But these are the kind of things I'm looking for, and I'm seeing a lot starting to flatten out and starting to come back up. Another one, this one Paul was into, and maybe Margaret a little bit, Nike. And Nike had a nice comeback. It's just kind of come up. We're seeing, you know, it came up, hit the upper Bollinger Band. We're above the intermediate support level now. You got a nice upsloping 9. You got the MACDs looking good. We still got good stochastic. We're still above 50 here. So here's Nike for you. And just watch your support resistance. This was a surprise. This is today. Coca-Cola had a, you know, it's down below. It was down below the 200, down below the 9. I was watching it yesterday. Today it popped up above both the 9 and the 200 and the intermediate support level. Went right up through some cells, and now it looks like it's kind of settling back on this level here. So you got to watch that. So I don't know, you know, you got the 50 up here. If you've got in at this point, you don't have much on the reward side. And here's your intermediate support level. But that one popped up, kind of surprised me, you know, with the markets we're seeing.
Hey, Mark,
Yeah.
on that last one, I think whatever it was, the one before this one, it was pretty much below the 200, if I saw it correctly. Does
Yeah.
that not matter in swing trading?
It does, because it means you're in a negative, you know, kind of a bear market on your stock.
Right.
But I started, you know, you just got to be more careful and set your stops when it's under the 200, okay? Because you're still in a bearish mode under here. But I've made a lot of trades underneath it. As long as I've got more oscillators, like the oscillators here, Scott, are looking good.
Yeah.
Those are 3 check marks in the positive. I'm above the 9. I'm above the 200. I'm above this. I mean, I'm just checking off things off my list. And if I have, you know, 8 or 9 checks offs on my list out of 11, you know,
More up than
that's a yeah. I mean, that gives you a better indication. To get all of everything checked off, Scott, is hard, you know.
Gotcha.
And by the time you find that, you normally your price action's up here close to the, you know, the intermediate resistance level. So these you can make some money on. You just got to watch them and keep your stops and your limits tight, you know. But
Sure.
this was a pretty good one.
All right. Thank you.
What else? Oh, Mondelez.
This week I'm at my wife's art studio. She's having a class today teaching people how to use jelly plates. If you know anything about that or have artistic interest, check out my wife's website at gingerlydesigns.com or check out her Instagram, this, that, and the other. So this week has been really sort of like completely crazy. We have been talking about this whole fall, this increase in inflation rates. We've been talking about how this market has been getting toppy since, well, mid-February. And Friday was a demonstration of how quickly this market can change and will change on you. And if you're not properly risk managing this, and you're not properly allocating and taking notice of the behavior of what's happening both in the stock market with the companies you're invested in, or the ETFs or mutual funds you're invested in, but more importantly, like the global economics and where we're going. We're in basically a center of a storm, and this economic storm is happening fast. It's pretty cool. These guys are starting a new business. It's a new brewery here down in Santa Rosa Beach, Florida. It sounds pretty cool, the whole bit. But, you know, I get concerned for a lot of small and mid-sized businesses because of the economic conditions that we're presently in, and the cost of money, the cost of financing a small business or a big business, and honestly, the global look at the United States and its financial conditions. And to me, well, that's concerning, and markets are starting to show this. And so what I would encourage you to do is to get to understand what's happening in markets, in global economies, and how they all affect each other. You can hope your way to poverty, and a lot of people do when it comes to investing in the stock market, and that's why you need to have the tools and the guidance, and that's what we do at Best of US Investors. I would encourage you to check us out and join the Platinum channel. Now, we were running a 50% off special, 50% off for 3 months on the Platinum channel. That ended last Sunday, but we'll have something special, but it won't be for a long period of time. So stay tuned, watch the videos, get to know us, join our Discord. I mean, you can join our Discord for free. You don't have access to the premium or the Platinum, but you get to see what's happening there, the conversations, the video content, this, that, and the other. I encourage you to take action when it comes to protecting your wealth, because guess what? The people who are running our country, the people that we just haphazardly trust, they don't think about you every day. They're thinking about themselves and pushing themselves up the ladder. I know that's got to piss some people off, but you know what? That's the honest God truth. That's what it is. Join the Best of US Investors, get involved, take control of your life. Peace, and always live loud.